You know, some people would take a look at what you're saying here and say, well, hey, that's just short-term stuff. What you need to do is buy and hold for the long term. What do you think has happened to buy and hold now that we've entered in a brand new century? Communications have come faster and faster. The internet's out there. News gets disseminated faster. And with the I'm kind of answering my own question here because I have a certain opinion about it. But let me just ask you, what do you think about buy and hold today?
I'm not real fond of buy and hold, Preston. My reason is that I think the management changes, the environment changes. No, of course, management and environment have been changing for the last 100 years in the business world. So is this something that's brand new? No, but more and more you see executives jumping from one firm to another, and you see the environment changing very quickly, whether it's interest rates, whether it's political, whether it's terrorism. All kinds of things contribute to the business environment changing. Oil prices. Look at what oil prices have done across the board, all the way from the dot-com and internet stocks, all the way to the transportation sector. And, you know, if you looked at it, you'd say, of course, the transportation sector is going to be affected by oil. But so are the internet stocks. I mean, eBay and Amazon are going to see less money spent on there when people's pocketbooks get tightened up by oil prices skyrocketing, and people all of a sudden have less spendable cash. They have to go into any store less, including the internet. So that's why the discounters like Walmart and Family Dollar and those kind of stores did very well during the time when people were feeling the pinch. And as soon as that pinch lightened up, well, then all of a sudden they could go back, buy more on the internet, buy more at luxury retailers like Tiffany and Coach, and a lot of that kind of thing. So I'm with you. You can do a lot of fundamental analysis, but I think the market conditions are changing so quickly these days that if you buy a stock at 10 bucks and it's trading 15 bucks, it might be time to say goodbye and say, thanks very much, I made 50% on my money, let me move on to the next trade.
Yeah, and while you're talking there, what brings to my mind, I mean, just the sectors that can get created literally overnight. I mean, when the country starts demanding these flat panel screens for computers, when that happens, sometimes companies have a big S-curve that can last 20, 30 years back in the past. But that little S-curve can last 18 months. I mean, there's 3 or 4 or 5 companies that come up as competitors, and all of a sudden when that's saturated, that little wave goes away, so to say. So there's lots of little things that just happen, little pockets of things all over the place. It's an amazing economy we live in that's just drastically changed. The Wall Street Journal sees fit to report on some stories quite often, and they seem to include you in the stories. Now, not just Wall Street Journal, but a lot of the news agencies also. And it's about, now they report on it, by nature of reporting, they have to report on it after the fact. And we're going to get into a little bit why you know about this stuff before they do, and why sometimes your colleagues on the floor won't let them in on the story until after it's done. But when the Wall Street Journal or Reuters or someone like that comes and wants a little scoop from you, what are they after?
Well, they're looking for anything with sizzle, of course, in particular potential takeovers and things like that, or perhaps a lot of speculation on the bullish side that a big hedge fund or a big institution is taking a substantial stake in a company. Now that's going to cause that stock to rock, obviously, and if that is happening on the option side, that's quite frankly, folks, some of the unusual activity that when I see that happening, that's when I can tell you this stock is going to start moving in all likelihood very quickly. The nice thing about options as opposed to stock is the time frame that they're expecting. For instance, Preston, let's say that you had a stock that's trading in the near-term options, and let's say that those near-term options happen to be August options. Well, if somebody is speculating in August options, they expect something to happen in the very near term. They expect perhaps something to be announced over the weekend, or certainly something to be announced in the next few days, not weeks and months, in the next few days. If that speculation is occurring in an option that has 3 months to go, that's 3 months out there, 90 days into the future, well, that's not telling me that they're expecting a takeover to happen over the weekend. It's more or less somebody positioning, Preston, for the longer term. Still bullish, but considerably different time frame. When people are just buying a stock, you can see the additional buying manifest itself in, of course, the volume. All of a sudden it goes from 3 million shares a day to 6 million shares a day. Everybody knows that stock is more active, but of course you don't know anything about the time frame. That's one of the great things about options trading, is that you know the time frame that the speculators are anticipating something happening, and in many cases the insiders, people who might have a little more knowledge than you and I about what's going on, when do they think some news is about to break.